Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bullish scenario where we're looking for a finished three-wave corrective structure in a zigzag ABC, a 5-3-5 wave move, hitting the common target area for a wave C, and now look towards the upside. That means the invalidation for this scenario is the low at 49k, and we want to see impulsive structures to the upside on a 1 hour time frame. If we then go to the 1 hour time frame, we definitely have a sharp move to the upside, but currently what is most important is the retracement to the downside over here. We want this retracement to be a three-wave corrective structure, as then the probabilities are higher to still take out the higher at 63k, and then we can take it from there, but that would be a minimum requirement for bullish continuation. In this case, what we are then looking for is a WXY, a bigger three-wave move, after which we look for continuation to the upside, where the three-wave structure in wave W is a zigzag, A, B, and then a wave is C. Working on wave X is still looking for a wave Y. The reason that the probabilities at the moment are higher, that this structure over here is part of a wave X, is because of the structure we had yesterday. This move over here counts best as a flat structure, an A, B, C wave move, which means corrective, which increases the probabilities that all of this sideways price action is corrective in an X, and the probabilities are higher to still take out these lows over here, which can then happen in your wave Y. Now the target area for your wave Y is between the 0.618 and the 1.236 trend-based fib extension, taken from the start to the end of W to currently the high that we have for wave X, giving you a target of 57.5k minimum, and 54.4k is the lowest target for wave Y. We do have some additional support and resistance. We have hit this blue box support here, as you can see, but we haven't hit the daily naked point of control at 57150, which is the reason I still have this blue box on my chart. Locally, we have just below price some support here, 58.6, 58.8k. We have the resistance to the upside. We have hit the weekly naked point of control yesterday, but we have not yet hit the daily, so that is also why the blue box above is still on my chart. But the daily at 60.9k can still offer some resistance. But then to the downside at the moment here, inside the target area for your wave Y as well, another blue box, 54.6 to 55.3k, a nice area of support. And in that case, what we are then looking for is, if price is going to move towards the downside, we want to see signs of strength. So move to the downside, price holding, ranging, grinding to the upside, some bullish CVDs, impulsive structures to the upside from an Elliott wave point of view, some volume coming in, off we go. If we then go to the bearish scenario, on the daily time frame, we're looking for a double 1-2. This is a bigger impulse to the downside, because what we have is a 1-2-1-2. You expect a very big 3 to the downside, much lower than the target here, which would be a minimum target for wave 3, the 1.618 at 42k. You can see that the first wave 2 in green hit the 886 retracement taken from the start to the end of wave 1, which is always a rare target for a wave 2. No problem to see a deep retracement for a wave 2 after a leading diagonal in a wave 1, but the 886 is always rare and never preferred for wave 2. The moment you hit an 886, probabilities are higher that this is a wave B or a wave X, and any move towards the downside is part of a corrective structure, not an impulsive structure, which decreases the probabilities for a bigger impulsive move to the downside, the 1-2-1-2 I have on my chart, and it increases probabilities for more bullish scenarios where we still continue the trend at a later stage. Now, if we then zoom in to this wave 2, what you want to see in this case is a three-wave corrective structure to the upside, and then impulsive moves back towards the downside. So let's go to the 1 hour time frame, and you can see that the move towards the upside of the low has the potential to at least be counted as an ABC. Common target for wave C here is hit. Now in this case, we are then looking in the most bearish scenario, if we don't want to take this high anymore, for a double 1-2. 1-2, 1-2, expecting a very big 3 towards the downside. The invalidation is very clear, 61.8k. Take out this high here and the probabilities are high to move to at least 65k, as it increases probabilities for more bullish scenarios towards the upside. The common target for your lower degree wave 2 here is the white box, the 618 to the 786, taken from the high to the low of 1. And if price would hit the 886 at 61.4k, it significantly reduces the probabilities for this scenario to the downside. Now, after a second wave 2, we then look for a very impulsive wave 3 towards the downside. And in that case, you just want to move through support immediately, right? You want to see price move down, bid holding, price, you just want to see price move towards the downside consistently. And that is also why I mentioned that in the bullish scenario, we want to see price holding and we look for signs of strength. Because in both of these scenarios, bullish and bearish, the probabilities are at the moment highest to take out this low by all means, eventually. Therefore, if we do, we want to see signs of strength, because there's always that small possibility that you just tank towards the downside. In the bearish scenario, for a double 1-2, you look down for 3 instead of a WXY. So the recommendation from an Elliott wave point of view is, if you do take these lows, wait for a range to form, signs of strength, and then act based on the new information that we get on the chart. Yesterday, the probabilities were higher to continue this range sideways. It is great to see that we have continued sideways, where this is then a first structure, the flat as mentioned earlier, A, B, C, to look for a bigger three-wave structure, just a simple sideways range, and then eventually still look for the lows to be taken at some point as the highest probability. Looking at the CVD divergences, it's very neutral. We have bearish CVDs, we have bullish CVDs. Not much going on. It's typical in such a range, looking for an X or a 2. When you don't really know how to act on a CVD divergence where you both have bearish and bullish, just wait for one of the CVDs to play out. Of course, context is important. The Elliott wave count is important. But we are, if you would look at a range structure, we are in the middle of a range, right? We have the high of the range, the low of the range. We're in the middle of the range. So naturally, area of interest, and a little bit of support here as well, which can be interesting for maybe 3-minute bullish CVDs. We'll have to wait and see. We also have some news today, 2:30 p.m. Central European time, so make sure you trade safe around this hour, as it might increase the volatility. If we then finally look at the probabilities of the different scenarios, then on the 1 hour time frame, the probabilities are at the moment highest to continue this range sideways and eventually take out the lows. On the number 2 spot, we then have bullish continuation. Important, if price moves down from an Elliott wave point of view, patience is recommended. Waiting for a range and signs of strength is recommended. And this is due to the move down being either a big 3 or a wave Y. In a bearish scenario, we look for 1-1-2 and a big wave 3 to the downside. In a more bullish scenario, we're looking for a WXY. You want to see a range forming, signs of strength, and then look back towards the upside. We won't know till we get more confirmation. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.